When you think tech giants, you think Apple, Nvidia, Google, but powering them all is Broadcom, the unseen giant. Broadcom isn't flashy. They build the guts of the digital world, semiconductors and infrastructure software. Their chips are in your iPhone, in data centers, in the cloud, and at the heart of the AI revolution. If you're streaming, calling, or connecting to Wi-Fi, you're probably using Broadcom tech. They dominate their markets, supplying mission-critical components to the world's biggest companies. But they're not just about hardware anymore. With the VMware acquisition, Broadcom now powers the software that runs corporate IT, private clouds, and data centers. This move created a sticky, recurring revenue stream. Once you're on VMware, it's tough to leave. Broadcom is now a diversified powerhouse with a hand in AI, cloud, 5G, and enterprise software. CEO Hock Tan is a master strategist, turning acquisitions into profit machines. The secret? World-class chips plus indispensable software. That's why Wall Street is obsessed with Broadcom. Let's get to the numbers, because they tell the real story. Broadcom's latest earnings? They crushed it, again. Revenue hit $12.49 billion, blowing past Wall Street's $12.03 billion estimate. A 43% jump year over year. Adjusted earnings per share? $10.96, beating expectations. This is a company firing on all cylinders, integrating VMware, riding the AI wave, and delivering on every metric. AI-related revenue alone hit a record $3.1 billion this quarter. Nvidia sells the GPUs, but Broadcom connects them all, making AI data centers possible. They're not just participating in the AI boom, they're essential. Management raised full-year revenue guidance to $51 billion, up $1 billion from before. Profitability outlook? Up to. Confidence is sky high. When Hock Tan says the good times are rolling, you listen. Broadcom isn't just a story stock, it's a profit machine. Let's talk cash, because Broadcom is a dividend powerhouse. They just declared a $5.25 per share quarterly dividend. That's $21 a year, paid like clockwork. Broadcom returns about half its free cash flow to shareholders by policy. Over the past decade, their dividend has soared, creating a beautiful staircase of wealth. The combination of a solid yield and explosive growth, that's the holy grail for investors. Last quarter alone, free cash flow was $4.58 billion, plenty to support and grow the dividend. In a volatile market, that steady income is a cushion you can count on. Broadcom lets you ride the biggest tech trends and get paid for it. This is how you build real long-term wealth. Don't underestimate the power of a growing dividend from a world-class company. It's the secret sauce for a great portfolio. Ka-Ching. Broadcom is built for the AI gold rush. While Nvidia gets the headlines, Broadcom's networking chips are the backbone of every AI data center. They make the custom silicon, switches, and adapters that connect thousands of GPUs, indispensable for the cloud giants. The VMware acquisition? A masterstroke. Broadcom now owns the software that runs modern business IT. Hock Tan is streamlining VMware, focusing on high-margin recurring revenue from enterprise customers. This creates a stable cash flow to balance the cyclical chip business. Broadcom's custom chip business for giants like Apple and Google creates deep, sticky relationships. These aren't one-off deals. They're long-term partnerships built on trust and innovation. The result? A powerful competitive moat. And with Hock Tan at the helm, an operations legend, Broadcom keeps executing, creating massive value for shareholders. Bet on the jockey, and Hock Tan is one of the best. Even giants face risks. The semiconductor business is cyclical. Booms don't last forever. A slowdown in data center spending or the economy could hit demand. The VMware integration is a huge challenge. Shifting to subscriptions and focusing on big customers risks alienating others. If the transition stumbles, customer churn could hurt long-term value. Competition is fierce. Rivals like Marvel and others are always pushing to catch up. Broadcom must keep innovating to stay ahead. And don't forget geopolitical risk. US-China tensions could disrupt supply chains or markets. These are real risks every investor must watch. But knowing the risks is how you invest smart. Broadcom's strengths are huge, but the challenges are real. Stay sharp. So what's the verdict? After blowout earnings, a massive dividend, and a surging AI business, Wall Street is raising price targets. Some see $2,000 and beyond. Management just raised guidance by $1 billion. Demand is off the charts. VMware is already boosting profits, and the AI chip business is in a supercycle. A 10-for-1 stock split is coming, making shares more accessible and adding positive buzz. Broadcom is a core holding for anyone betting on the future of tech. It's not just an AI play, it's a diversified powerhouse in cloud, 5G, and enterprise software. You get tech growth and industrial-strength cash flow in one stock. With Hock-Tan leading, this is a best-of-breed company. My advice, own it, don't trade it. The ride may be bumpy, but the long-term story is compelling. Broadcom is a beacon of quality in tech. This is a stock that belongs in your portfolio. Booyah!